Okay, lots of talking points this morning, but first let's address the big puzzle that is crude and the fact that we're once again nudging that $100 per barrel mark. Let me welcome on board Santosh Rao and ask him about what he's making of all the news flow in the world right now. Santosh, hi, morning. Great to have you today on ET Now. Santosh, first let's talk about crude because instances tell us that the markets are not going to react to the same instance twice in the same fashion, but this seems to be a polar opposite because, it almost seems like an inverse trade, crude and India.
Absolutely. I think crude going up is an incremental negative across the board. We really don't want that because the Fed chair has pretty much said that he's going to be very focused on inflation. And this is going to spike up inflation, which might raise rates, which will impact everything else. It might affect the growth rates. So it has a domino effect down the line. So we really don't want this. So hopefully, there will be some kind of a resolution, but doesn't seem like it right now. But if it goes up, there are estimates saying that oil can go up to 130 if both the arteries coming out of in the Middle East they're shut down. So or there's some disruption there. So I think it's important. Crude going up is bad news, and it has big impact across the board.
Santosh, how do you look at the macro impact of this rising tension which is there now? You have crude going back, inching above $100. At the same time, you have the inflationary pressures which were easing off because the impact so far has not been much. It's again coming back to coming back there, and you have the 10-year benchmark which is also heading up for US, which is now at 4.7%.
Yes, all these signs are very bad. I think there was talk. I mean, I follow the market quite closely. There was enough supply in the pipeline for some time. When that threshold is broken, and we are pretty close to that, I think it's going to take a long time to really get back to normal. It's going to take some time to refill all the whatever we've lost so far, the time lost and the oil exploration and the filling of the tanks or whatever. So I think that's an issue. It's going to take some time to get that in, and that has an effect. And the market is sensing that if inflation goes up, rates go up. You're seeing the 10-year go up, and 10-year has other issues also. U.S. is worried about the market is worried about the U.S. fiscal deficit. We're adding another $1 trillion if Trump gets his way to the budget deficit. So that's bad. Already that's lingering there. And then you have this inflation fear coming up. So that's net. It's going to affect that. It's going to affect housing. It's going to affect economic growth. It has an impact. So yeah, US is not looking at it very well. It has an effect on the markets, even though the AI boom is there, but it's being really offset by the concerns about this because all these hyperscalers are borrowing money at a much higher rate or will end up buying at a much higher rate, which will have an impact on their cash flow. And finally, Google kind of threw a wrench on the whole thing when it said it was cash flow negative this quarter, last quarter, which is, I mean, that was the best part about the whole thing was these guys were funding this whole thing by their own free cash flow. And now it's really eating into that, but they cannot stop. They have to keep on going. It's a race to the top, and no one wants to be left behind. So a lot of cross currents, net, a negative impact.
What do you make of the latest on the tariffs, Santosh?
Yeah, again, it's going to be on and off. We'll see where it sticks and how much will stick. But this looks like it might go. It's to some extent it was expected. He's been talking about it for a long time. This doesn't look that ominous, 12% from what I see. It's much better than 25%, 15, 20%, whatever it was before. And he keeps throwing this 50%, 100% threats. So if it's 12%, I'm sure it's manageable. Countries have accounted for that already. So that I don't think will have an impact.
You allocate currently, Santosh, from an asset class perspective, to go out, start buying equities on the dips that we'll start to see given the uncertainty, or do you wait and watch for the uncertainty to kind of fade?
Yeah, I think some things are very obvious. Invest in industrials because these guys are really spending capex, and that goes into all these caterpillars and all these equipment and the energy companies that really feed the AI complex. So you really have to. That's a no-brainer there. Financials will do well. They are doing very well. The loan losses and their books are very good. The earnings and report, they're very good across the board that we just saw. And healthcare is good. These three things will ride you out of this whole mess with this volatility rather. And AI, selective AI, you need to get in there. You have to be in it, but don't throw any new money into this yet. Just wait and see where it settles because there is no equilibrium in what's being spending and how much revenue will come in, the rate of return, the ROI. We still don't know what is that point yet. So I think my market is hesitant. They feel that the companies are overspending. There may not be a return. So that issues are playing out there. But overall, we're still in the third inning of a long game, and there's a long way to go. It'll be up there. The good companies, I would continue to be in that, like the Nvidias and the AMDs and the Intels. And these are companies right in the ground zero of AI, in the infrastructure AI. And so you need to be in that. And slowly we'll start going to the application side. But right now, still the focus is on the infrastructure side.
Santosh, India for the longest time has been just very range bound, though some pressure coming in because of the IT and banking earnings. Would you deploy into India now?
Yeah, I think at this point, let's see where I think geopolitical tension is the biggest wild card. We don't know where it's ending, how far it's going to go, because if the energy prices go up, it will have an impact in India and other places as well. So I would hold off on that at this point. Wait till it settles. The rates here are much higher now, are going to get higher if this continues. So US will offer a much better risk reward for all the if this tension continues. So I would wait here and then slowly get into India down the road. But at this point, I think you want to avoid any cross currents because of the geopolitical tensions.
Right. Okay. Santosh, great to be speaking with you. Thanks as always for your time.
Thank you. Thanks for having me.